All right, welcome to the Trade Brigade end of day routine for Friday, August 14th. Let's do some chart updates as well as a scan and prepare ourselves for the week ahead. Let's begin with this week's expected move for the S&P 500. We're going to start by going over to the options chain. Let's pull up those 7 DTE options next Friday. And you can see over here, I'm going to round that up because you can see the fraction of the penny. That's about $8.40 of an expected move for next Friday. It's going to be on top of and underneath the settlement of 776.34. It's going to give us a bottom right point of that's what 767.94 and a top point of 784 no 84 yeah 84.74, and we'll bump this out to the 23rd. We'll bump this out to the 16th, and let's just update the shade of gray, of course, and we move forward from there. Got some great feedback in the last one of these sort of end of day routine videos that people didn't mind the process of going through and manually doing the expected moves and not doing it ahead of time. So we'll continue to do that. Just updating the levels here. Again, the top side is 784.74, 784.74, and we'll bump this out to the 16th. The 16th, we'll get our cyan level up there. Take this one, and that's going to be at 767.94, 767.94. Just forgot the decimal. And we'll go to the 16th, and we'll go to the 16th, and we will move forward from there. So that looks good. Now the next work to do here is figure out what the hourly structure looks like and where the levels actually should be updated to. Just for what it's worth, let's make this a little easier on the eyes, centering it on screen. Of course, this is our new all-time high, so let's update that price level and call that ATH. Great, show that on the right, and we'll make that firm as such. This previous all-time high honestly is not as important to me anymore, the way that this chart structure has actually developed. I'm much more interested in the opening print in there. So this is going to be, let's call that 776. Let's try that out for size. Let's just get rid of those 85 cents. Let's reduce that to a gray dotted. We don't need the name anymore on the right. Okay, that looks good. I also like the way that we have, so see the opening print back here? It's this as well through those levels. And then beyond that, it's really the opening print of today's session, which delineates this range right here down below, right? So this gray dotted line gets updated to, what's the level in there? Today's opening print, let's call that 774.85. Can we get away with that? About $1 higher. 774.85, and that'll go to a firmer gray level, and that is that. So, important to remember where this level is, but for the most part, that's a new 2-day balance range. It's an inside bar today, right? If we just go back to this daily chart, you have an inside bar, so we pretty much want to know where we're at relative to the container bar paired with some of the structure from earlier on in the flag back over here. The next thing I would like to check in on is the anchored VWAP set and just see what we're working with as it relates to anchored VWAPs and whether or not we need new anchors. I pretty much like where we're at, believe it or not. I don't think there's a need to update anchored VWAPs. If you really wanted to, you could probably place one here, and that wouldn't be all that unreasonable. You could go there, or you could go from the breakout day of Thursday. For me, there's not enough information there that really warrants placing an anchored VWAP. It's not the start of anything major. I would not call this a successful breakout yet, so not too inclined to update the anchored VWAPs. And that concludes the spiders, which means we jump on over to the nasty NASDAQ, and we start with our weekly expected move. As always, let's bring this one up. Let's come over here, and conveniently the 7-day options are still open. Looking at an expected move here of about 1271, again using that 9 there to round up the next penny. And that brings us into a bottom right point on math here. Let's use the calculator on this side. That is going to be a bottom right of 718.36, and a top left of 743.78. There we go. And we come in and we bump this out to the 23rd, this one to the 16th. Color gets updated. And we keep moving forward. Let's go with a 20%er. And we come over here and update this as well. We say this goes back to gray. A lot of comments say like, hey, you can automate this. And I know you can. I actually have the script to automate expected moves here in Thinkorswim. But there's something there's something nice about doing it manually. There's no excuse to not be really familiar with what the level is. 743.78 we said on the top side. 78, 743.78. 743.78. It's the same thing, by the way, with the levels that we talk about in the pre-market preps. If you're familiar with our pre-market show over on the main channel, you can automate a line at previous day high, previous day low, overnight high, overnight low, all that stuff. But I'd rather place it there manually and just know darn well that I put the level there. 718.36 on the bottom side. 718.36 on the bottom side. And we go with the 16th here and the 16th there. And our expected move is set. Looking good. Let's clean this chart up a little bit. On the spiders, I didn't feel like we had to update too much in terms of levels. Obviously nothing above, but we could start to diminish or dim back, I should even say, some of these levels. I like to make them black, not remove them entirely. That way, should I ever need to reference downside levels, I'm not, having to go back and manually place every single one. I could just brighten those levels back up, and we've got something there. Let's go over to the NASDAQ, though, and let's go to the hourly chart and start to figure out, where are we really in play here? So these lows, probably not so much in play. That's like a full 2 standard deviation outside of the expected move. I tend to like to have maybe just 1 to 2 levels outside of the expected move brightened up. That way the chart retains a little bit of clarity as it relates to not, confusing. It's not even confusion. It's just visual stimulus, right? If I could make this chart as simple as possible, what are the levels that I care about? So that's really it to the bottom side so far. And to the top side, I think we're good as well. Let's just double check that these levels are as accurate as they need to be in terms of what we've got in front of us here. So this is the midpoint of the junk drawer, the 716, 714, 25 zone. I like that still. I still have to respect this at 723.70s. I'm a little bit more inclined to bump that up by, what would that be, 727. I know we're kind of splitting hairs here, but it's the opening print of Thursday. It's a little bit more important to me, so let's go 727. And this is still a good line as well in terms of delineating the upper flag from Thursday versus the lower high into the close from Friday. What I am fond of doing, though, is reducing the length and the noise to the left. So I'm just going to not duplicate. I'm going to remove that drawing, and then I'll just draw it over again right here. So, you could call it crazy for redrawing the same thing or whatnot, whatever. Doesn't matter. I like having a little bit less visual noise to the left-hand side, and we'll kind of leave that as is. Levels to the top side still making sense. I would just want to double check that we don't have anything I'm missing over here to the left. This still looks accurate. You could see it here, here. You could see this here in the wick there. Makes sense. Then, of course, you're just looking at the all-time high. So this actually checks out. Very, very simple chart to the top side from here. And all set in terms of NASDAQ levels moving forward to the IWM. Of course, the good old small caps over here. Let's do the expected move. We'll go through the same process over to the trade tab. And we've got ourselves 7-day options. Good still. So we're looking at about $4.62 expected move. You could round that up to 63. Let's come in here and say we have 305.09 with that on top. That brings us to a 309 .73. Let's call that 71. If I'm not mistaken, right? 3071. There we go. And we go top left point, and we say that that is going to be at, oh, sorry, I'm doing this backwards. That is the top left point. Copy, paste, and then the bottom right is going to be at, take away, what was it, 462, 463. So call that $300.46, roughly. I could be off on a penny on either side there. I might be missing the math. Let's not split hairs over a penny. That's not the crucial point. We just don't want a general zone there. Let's go out to the 23rd here and the 16th here. Good. The point is not to care about the pennies, but generally know where the expected move is. That's good. And we'll take a peek at this, making this gray and doing this. All right, 50% opacity. Let's bump this up to the top side. What was that? 309.71. 309.71. That's crazy. It's just 3 points higher. Cool beans. Let's bump that to 16. Who says cool beans anymore? I guess me. Let's put this up there as well. It's going to be at $300.46. $300.46. Good. 16th and 16th of August. Great. You might be saying, why the 16th? Why not the 17th? That's Monday. It just ensures that the line is to the leftmost edge of the next bar. All right, little tips and tricks here on Thinkorswim. Okay, so once again, we don't need these levels down below. Unless there's a absolute disaster with interest rates, I don't think the Russell is going to cascade and crash through all the moving averages and through the bottom end of the zone. I pretty much want to just make all of these levels less visual noise until we come into this gap in here at the 20 SMA. I will even remove this one. It's not removing, it's just diminishing the visual impact. There we go. That's the bottom, and we've just got to work on the intraday levels, right? So ensuring that we're still looking at the most relevant data points here. Survey says yes, this does not need to be all-time high. I could say previous all-time high at this point. That's fine. I like those labels every now and then. This is like meaningless. Let's get rid of that, and this is just the true all-time high. Let's firm that up like that, and we're good to go. Very simple chart here in Rusty Russell land. Chart looks bullish, right? Breaking out the blue sky territories. It's just a matter of does the pullback remain constructive when and if we get one. So all set there. Let's go from the market here into our sectors in terms of checking in on levels and such. Then we'll go core list of companies and we'll hit the scanner, right? So IGV looking good in here. I like the way that this continues to develop. The software rotation is still well underway. Going into the hourly chart to start to figure out some of these levels. You can see it's still a key inflection point there, that 103s. It's this little shelf, so I like keeping that. Let's go back to this hourly. The gap is still relevant. I kind of want to figure out where the most relevant level here is. I'm feeling like it's this, but we're getting a little level happy, and I have to remind myself this is like it's an ETF basket product where I don't necessarily want to trade the IGV. I'm not trading the IGV. I'm trading the components within it. I just want to use this as a judge of what price action is doing. So I actually don't, I don't want to overanalyze or put too many lines on this screen when the purpose of this chart is to just understand, is there a tech rotation happening under the hood? Are they moving from hardware into software? Are they moving from software into hardware, right? What does that rotation look like is the main point of this chart. I'm not trying to nitpick every little level here. So we'll leave it like that. Is there anything else we need to know about to the top side above this area? Kind of a triple whammy of levels up here, right? Overhead supply, lower high, and then this peak, kind of a triple whammy. We'll let that be, though, at 111.75s in case we really start to kick in gear on the top side, and that works for me. It's going over to energy. This chart just needs some reductions, I think. Let's just do this. And then let's do this. And let's do another level here, which is just the bottom of this range. And we should be good there. I don't necessarily think we're looking at energy, breaking the 50-day in the next week's worth of trade. Maybe some Strait of Hormuz news, but for now, this looks fine to me. All set. Levels complete. Maybe you could add a little something here at about 60-40. If you're really dying for another level on the screen, there you go. You got yourself a 60-40, and that is that. Hourly chart, yeah, it looks fine. Let's go to this XLV Healthcare. See what we're working with here. Again, the idea would just be to reduce some visual noise. We don't need all of this. We could do that. Could probably do this and just leave it to the previous all-time high. And we'll reduce there, looking good. Hammer's fine. Again, don't want to get too nitpicky in the range. The only thing I would likely do here is change this to this. Don't need to show the name on that anymore, and we just drop in the true all-time high there, which, fine. Let's just label it, though. Now we have ATH, show that on the right, and we're cooking with gas. Looks good. Looks good. No need to update that any further, I don't think. Hourly chart, just to double check, triple check. Yeah, it works for me. Works for me. Keep it simple. All right, next up, let's go over this XLF, financials. See what the financials look like. Really strong stuff. Really, really strong stuff. Let's go ahead and do this. Probably leave it as is, unless JP Morgan falls out of bed and Jamie Dimon says something disastrous. I mean, this chart looks good. I would feel fine about pullbacks that either ride the 20 SMA. You can see here. If we break the 20 SMA, maybe the 50 starts to play catch up over the next little bit. It should likely slow its roll, and maybe the trajectory is more like that as we start to flatten out, but certainly pulling higher. Yeah, I'd leave it to there, previous all-time high. Let's jump on into this XLI. Again, probably a little bit of noise reduction just by getting rid of some of these levels. And maybe this one as well, and then we'll be good on the bottom. We'll double check the top side. I mean, just a really kind of nasty sideways action there. On the hourly chart, do we have any respect for the midpoint? We do. We do. So I would leave 186s there, but what I would probably be more interested in is let's remove that. Let's do this. And let's just define the new range, right? The new range is self-contained by really kind of these lows in here. Can we get away with 75? It's a little high. Let's go with that settlement. Let's go 65 on that. And that's the new range, right? Very, I think, very straightforward. Look at that on the daily, right? If you're balanced up here, bull flag, maybe higher. You lose it, and okay, thin structure, right? So that's what we got on that one. Just kind of be more interested in this developing range. Next up, staples. Nothing. I mean, you could really, if you wanted to draw the gap in here, I wouldn't fault you for that. Staples is not a sector I want to overanalyze. I just want to know, okay, it's in this range. I don't care if it closes this gap. It's not useful information to me. What's useful information is if this is breaking out of the range, leading the market higher. Okay, are we dealing with a risk-off rotation? It would be a concern. If we're closing this gap, whatever, market's fine. So don't really mind this too much. Let's keep it simple on that. Let's go out to this XLB. Probably keeping it simple over here as well. You could make an argument that you got like a new range low somewhere around $50.10. You could probably get rid of this and dim that for now, just because I don't think we're going there this week. And let's just check in on that on the hourly chart. What would the actual level be in here? It's actually $50 right on the nose. 50 on the spot. Perfect. Range lows established. Okay, so that's the small update there. Anything, did I miss that on the hourly here, right hand side? No, this looks fine. This looks fine to me. Okay, so all set on XLB, Mag 7s. Little flag action up here, love it. Really would like to see them, so they shook the flag. There you go on Wednesday. Inside bar failed breakout. Shake it again and go. I don't know. Again, more analysis coming on the main channel for Saturday, but for now, yeah, I mean, looks fine. Looks fine. Levels are leveling. Again, you could get level happy here and put something, for this if you really want to see the break underneath that Wednesday low, but I would leave this for now. You just generally ask yourself the question, am I bullish or bearish above or below 68.20? That's what matters, right? Look at your consolidation here. Look at the way that we held it into the Friday low. If you take out Friday's low, yeah, I mean, you're probably looking at Wednesday's low, right? So that is that. Let's go back to this daily chart. Yeah, let this be. Again, if we wanted to reduce some visual noise, you could probably get this one off the screen like that. Simplified just a little bit, not bad. Let's go over this XLRE real estate, one of the most slow and annoying sectors over here, but for fine reasons. Like the XLB, I don't care about this gap down there. It's just, what are we going to do with this overarching range? I think this is fine. No need to level update on that. XLC's good. Nice improvement. Making a new high finally. Do we have the double bottom brewing? It seems like it. Let's just double check this level. Yep, it's right on the money. Okay, I'd let that be at the 112.75s. And we go back to the daily. I don't think we need to update much here. I think we can let this chart be. We go to discretionary. We could probably, again, eliminate some noise and say, hey, get on out of here. Probably could have done this last week for what it's worth, but let's just do a little bit of this. Continuing along. Chart's fine in this range. It's really just all about these gaps underneath us, right? So I think we are A-okay when it relates to, or as it relates to the levels here. No need to subdivide the range. We'll just let it be. It's looking good. Let's go to utilities. Let's not skip around. I always like to have the all-time high firm as a color, a level on the screen. So do I think it's going there? No, but I'm going to leave it up as a white line. I won't diminish it to black yet. This looks fine. I don't think we have any level updates here. Utilities are fine. Moving forward, technology. This one we could probably start cleaning up some downside levels, removing some visual noise. Working ourselves through this here. On gaps, notice that's labeled G, so I'll remember to make it a yellow line when and if I have to reactivate it. And we'll do the same thing here. That's a G already, so that gets pushed back. That's looking good to me. I would leave this as is, and I don't think there's any reason to update anything on the hourly chart either. Really constructive action. Don't want to get level happy on an ETF product as a basket, just using it as a judge of price action. So these are some good basic levels on technology. SMH can probably clean this chart up quite a bit as well. Let's do it. So this is some of the boring work, but this is this whole concept of uploading these videos is just to show a little bit of the behind the scenes process. This is on top of additionally providing analysis on the levels. This is the work we do literally every day after the close with the group. So that's cool stuff. Looking good here. Previous all-time high. I mean, hardly, but that can stay as is. I don't think we're going back down there this week, but pretty violent and volatile on these semis. I would probably, you know what? Let's actually just take that one off, and we'll leave it to this at the 532.60s, which really represents that major shelf. This is the Leo liquidation and the higher lows that we're trying to come in right around it. Let's check the hourly though. I'm just curious if we could bump that slightly lower. I mean, those two opening prints were spot on one another. It's like 530.75. So we're splitting hairs a little bit, but I mean, come on, folks. All right, 530. Oops. There we go. That works for me. I like that. Little bit of an update there. Not a huge update, but just some subtle change. All right, what are these gaps telling us above? Because it's getting a little Swiss cheesy here to reconcile. A lot of yellow on the screen. We looked into the gap today and failed. Failed to really move lower. So the gap does get bumped a little bit lower, 581.50, 581.5. But that is, right, because it's the low of this bar basically. 581.87. 583. Okay, 581.50 might be a little low. 581.75 is better. That's close enough there. That's today's low. And we go from there. Again, it's one of these charts that you can easily overanalyze this one based on the way that semis play such a key role. You kind of want to stay on top of what the chart's doing, but sometimes, you got to remove some stuff. You could always put it back on, but just to get a little bit more clarity in the recent price action, I like that overhead level. Let's find a little bit more clarity in this recent range. It's really here. 586 was the same level we had, but let's just put 586. This gap will remain the key structure below us. That's fine. And then above us, what are we working with? Like, do we need to know, what is this? Again, another example of where you can get too level happy. I'm going to use this pivot as the new level. 597.25. That'll go like this. And then we could probably activate one or two upside levels. Let's just turn this one up into a dim gray. And we'll go one more. Why not? That's going to be here. This goes for a dim gray as well. Something like that. Subdivides this old range. Okay, those are the upsides. Let's go back to this daily chart. Does that look good? Yeah, that works for me. That works for me with an added emphasis. Remember, you read price action opposite of a book, right to left instead of left to right. So this is much more important than whatever nonsense is happening back over here. I like what we got. Let's move forward. Let's jump on over this DRAM. Another one where there's some downside levels that we could certainly reduce in terms of visual noise. Let's do some of this, some of this. These gaps, yeah, we'll make them dim for now. And we'll keep going. We'll get rid of this one as well. We'll leave it to the next level above. Good. And one more. Phenomenal. Okay, and now let's just double check on our hourly levels and make sure there's nothing in the Swiss cheese over here that we need to put on in terms of key inflection points. Looks like there is something here. I don't know if I have an old level in there. Looks like survey says no. Easiest way to find it is just do this. See how the black levels stand off on the gray from the overnight session? Yeah, there isn't anything that I had plotted in this neighborhood. We do need something though, because that Swiss cheese is worth some degree of respect. Maybe not a lot, but it's worth some degree of respect. It looks like the inflection point's here. Right through here. 61.30. 61.30. Because it's Swiss cheese, we'll make it a light gray level. And then these prior lows might be a little bit of something to pay attention to. Again, I hate how Swiss cheesy these are. Price action is price action. You got to stay committed to the process and how you judge levels and the success or failure near key spots. But this is a lot of dim gray levels. I'd prefer in a more, easily identifiable trend chart. We have just one or two subdivisions of a range and then a major high, major low in firm white. But this was the problem with the entire decline, right? It was like big down, gap up, gap lower, rally, gap up, fade. It just Swiss cheese galore. So that's looking good-ish for now. I could maybe see the argument for doing this. I could see the argument for doing that. I'll do that. I'll play ball with that, right? Because at that point, you're reclaiming prior lows, you're taking these prior highs, and you're taking Friday's pivot high as well because we pulled back from it, right? So I'll do that, and I'll leave the chart off on that note. That is through the sectors, so we're all set with our chart updates, which means it's time to hit the scanner. This is my favorite part of the end of day routine. Let's start with the universe focus list over 200 million and see what we can dredge up over here. And then we'll hit the sub 200 million, but over 100 million. It's just nice to separate those to see, where the names you really want to focus on versus not. All right, let's start. Let's go through. Let's see what the scan results tell us. Bending spoons got bent. Was the joke of the day on the earnings move lower, so no need to get involved in this setup. We could add, it's on an IPO list, but no need to write anything in there. There's the fun part. Let's start buzzing through. This SK Hynix against the list price of 170 is interesting. I think it stays on our radar. I don't know that there's an explicit trade ready here, but SKHY, let's keep on radar at the 170 list price. Good. SpaceX forecast IPO reclaim. Really nice. SPCX, there we go. Hammer, higher low over the 135 IPO forecast. Remember, it didn't actually IPO at 135, but that was the level that they were aiming at. It actually came alive at 150, oversubscribed, of course. Palantir still on the radar for a setup. I don't know exactly. It's just a speck on my screen, maybe? Yeah. I thought there was a level hiding in there. This doesn't really look like a setup yet, but it's got to stay on the radar. So it's already on the universe focus list, but let's just make note to keep it on there. PLTR, keep on universe focus list for new higher lows. Good. Dell already owned this, but possible re-entries on 466 retests. Dell re-entry on a range high retest? Question mark. Cerebras had to let this one go today. Just not really loving the reaction to earnings back in this base. I'd be willing to try it again at a lower average if it wants to wick into the 50. Let's say CBRS. Poor earnings reaction, but still able to hold a higher low in the base. Looking for 50 SMA tests. Good. ServiceNow, really constructive, 6-day balance range, reclaiming the 200 SMA. Software continues to be a leading theme right now. I think it stays on the universe focus list. I'm just going to call this focus list to be less repetitive. Of course, it's in the universe. It might not be on the ready list, but it's on the focus list. Acting well over 200-day SMA. Good. Datadog, what a pain in the butt that one's been. This ANET is ready. ANET, add to ready list on LBAF of the 8 EMA and gap close level at 198. Shop is already on the list, but there's nothing new to write about it, so we'll leave that be. Net, I feel like everybody loves this name. I don't think this is great price action. I mean, it's like one day up, one day down, one day up, one day down. It's fine. It's definitely going up and to the right. Don't get me wrong, but the price action is a little grindy. It's not like it's exploding to the upside. So UiPath is on the list already. Needs a new setup. It's not really writable as of right now. Workday acquisition, of course, conversation there. Fig Newton needs a lot of work. It's really trying to build an IPO base down here, but you got higher lows. Got to do something better. You gotta do slightly better than that. So not a focus. HPE already own it, but ad spots maybe a rising 8. I don't know. You got some people calling double tops. Some people calling for ads on pullbacks. I'm trimmed on it. And just to talk a little bit about it, low volume on the sell-off today. Hardly hurt there. Moving forward, nothing to write about it. Already own it. It'll be naturally on a watch list. HubSpot moving higher with the software group, but not really not doing anything in this range yet. So pass. Let's go back to this look. Carvana, too soon of a breakout. I like the range break. Right, you got this really nice stage 1 base down here, but I can't buy a wall-to-wall move. We call this wall-to-wall, right? Point A to point B. I mean, 2 days of consolidation up there. In my book, I mean, obviously the market's proving me wrong, but in my book, based on historical standards, good luck getting that to go through. What comes to mind is this Rivian, right? For anybody who has not studied wall-to-wall moves, right? This is what I would call, again, wall-to-wall move, straight up, no pullbacks, and then, does this. You try to break out without really digesting that, and what does it do? It comes back in. So I don't want to say that's the destiny of Carvana. Like, I'm not trying to be a hater on the chart, but from a technical perspective, it needs a little bit more work. Moving forward, Tom Lee, BMNR, how we doing? It honestly doesn't look bad. Mild pullback here, up and over those highs. It failed at once, so I don't know if I'm fully on board trying to look for it again, but we'll let that be. Team out in space, no setup there, but it is already on the universe list, focus list, because of the gap from earnings. Nothing here. Nice inside day on Trump tasers and body cams. So Axon. Say Axon. Inside, it's not really an inside day. I guess they're all inside of this day from the 11th. Inside days, plural, over rising 8 as a higher low, question mark. Put that on the list. Twilio finally coming in and offering a little bit of something. Probably 2 ways to trade this. This is on the list already as well, but this might be actionable depending on what the pre-market looks like. When did I do that? 25. Depending on what the pre-market looks like, we could have an actionable look here on this. Left side peak 1, left side peak 2. Let's keep an eye on this one early this week. TWLO finally pulling back after earnings. Peg. AEHR, great leader, out to new highs. Tough day today, but pullbacks could get interesting. It's already on the list. I don't think it's writable right now, so I'll let that be. MDB, pain in the ass stock to trade. Next. Wayfair, no thanks. Kids and cabinets. U. Higher, but I don't know where that thing's headed in terms of an entry, right? I don't know what you do with that. No thanks. Nope. It's a biotech. Nope. ZS. Got to stay engaged on this from this cup and handle. Pullback would be nice. Either that or stay engaged on the leading cyber name. So ZS. Finally starting to pull in higher lows, question mark. There we go. Nope. This looks good, this IT, but I do have to check what it is. I do not remember offhand, so let me just quickly pull this up on another tab. I don't want most actives. I want IT. I'm sure it's a software name to some degree, but what is it exactly? Oh, it's Gartner. Got it. I probably could have just looked at the little, too bad this doesn't expand. One of the features that's really nice about TradingView is that they put the company name, ticker, and time frame in the background there. That'd be really great if we could do that on Thinkorswim. Anyways, Gartner. Got it. Okay. Yeah, this looks good. This is a nice little flag up here. So IT looking good, flagging out over the 200 and left side peak. Good. Zeta, nightmares are made of this. I had this thing from 2680 in here. Anyway, can't focus on the past, got to focus on the future. It's up and away. Could look for secondary entries on it, but for now, there's nothing set up. What else? Wow, look at this. PDF Energy. Energy names ripping. I don't really play in that sphere, but they do look good, those energy names. Drones waking back up. UMAX, the leader there. Samsara, Internet of Things. It's a nice move here, but the problem is the linearity of the chart. I mean, point to a spot in recent history where this thing's made a nice linear move. No. I mean, stuffed. It was like, if you owned it for the right 3 days, great. But this is not a good chart history, I don't think, at least. Let's go further back. 3 years back. Sideways, gap up, sideways, and then just stuffed. I mean, that's not terrible, but not really a good history of movement, so I will pass on the IoT, Internet of Things. What else? Rubric, the alert's there, it's already on the list. Fastly. Guidewire, that one's ready. Add to ready list on LBAF of 171.66, or I guess 65, you guys know me. Round numbers only up here in the office. That looks good. Update, and let's keep moving through. 10x Genomics, it looks great. TXG looks great. Let's add to ready list on a few more days of pullback to correct extension. Right, still a little bit extended. That's why this label is yellow. It's more than 4x ATRs from the 50-day, but really nice push higher. I don't know where we're at relative to the Bollinger Bands. Could probably hit it with a quick, where would those be? Daily metrics, maybe? Yep. Yeah, see how we're through the upper bound of the Bollinger Band here? It's just now starting to come in. So we'll see where we go as it relates to that. Anyway, looking good on that 10x Genomics. PayC is on the Gapper list. That's all set, already taken care of and accounted for. GitLab we stay engaged on. That's already on the list. No new setup though, not worth typing. Sensors, Cognex, looking good. Computer vision. FedEx Freight, I mean, it's too new of an IPO. Plug, nah, what are we doing here? I don't think so. JFrog, I mean, just a tough look to get involved on that. How do you buy it other than just like buying the moving averages after that tough close on Wednesday? So difficult chart, but looks okay. Sezzle, no thanks. Nope. We're starting to get into some garbage now that we're in low numbers on the liquid leader filter and in negative territory. These rare earths are starting to wake up. I don't really see a setup on them yet. They're just coming up and over the daily 50s. So, and they're in kind of these prolonged bases. You're just in the middle of the base. You have some overhead supply here. Not quite ready in my estimation, or at least I'm not ready to get involved in the theme. That could change very quickly, but for now, no thanks. This red wire is getting pretty tight. Previous left side peak, but look at this Christmas tree action. Ugly. Ugly. That's low on the list. Tempest. I'd rather stick with the ARC-G as a group. What else in here? MP for that rare earths group. I mean, the volume's a little undeniable. Big volume in there. It'll probably just be in the back of my head. This Moderna looks great. Hammering right off the daily 50, the daily 8, higher. Bought some LabU today, so LabU's doing the heavy lifting for me on that. SIDM has that really nice low cheat in here, right? You see it on the daily. It's building a nice little spot. I wonder if there's a way to get involved. SI time. SITM. Nice. Let's say building higher lows in this base still. Good. Let's keep going. SMRs. Oh, geez. Let's go back to this 3-month chart. No thanks to the nukes. Not quite ready yet. Rocket Mortgage, no. Akami, no. Brigade, no. Let's just keep buzzing. Nope. 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 Fabrinet, not bad. Nice sideways action. Earnings, though. Let's get through earnings on that. Figure it out from there. Nope. Not a lot of good looking stuff down here in the lower bounds of the list. This Dokken, not bad. 129.50. I've been sort of tracking this to see if it's going to offer a classic reclaim of the gap up low. So far, not really. You know, or at least it has not made a clean move back through the level. So I don't feel like I'm really missing anything on that Dokken. Hims, not quite ready to do it. Peptides. Tower Semi, how you doing through that 273? Let's get a little bit more context where we at. Wow, really? I mean, a loose base up here, really, really sloppy, ranges in terms of the width. But if this thing could contract just a little bit, I do not hate Tower Semi. Let's make sure that's on the list. TSEM, not quite ready, but let's focus on this right-hand side. See if we can get a VCP. Okay, good. Roblox to 0. Fix, nah, no. Applied Digital, I can't hate this chart. I mean, I can hate it because it's below a declining 20, below a 200 still, but it is going inverted head and shoulders, firming up a higher low, putting pressure on the right spots. I would maybe go with one of the stronger names in the group, though. APLD makes me think that CORZ, is that one stronger? No. It makes me think HUT 8. Is that one stronger? No. What about Cypher? We already saw Cypher, I believe, but that is also a no. Wow, APLD might be the one, actually, in the WAGMI group, right? WGMIs. Wow, it looks better than the group. How about like a bit, it's not bit F anymore, it's Keel. And how about a BTDR, BitDeer? Wow, that's the best one. APLD. Well, okay. So before we go any further, I mean, if this is the best looking chart in that entire chart group or theme group, then I don't know that I want to be trying to play relative strength in a group that generally looks bad. But this is the strongest of the bunch. If you're interested in those data centers or miners turned data centers, that's the one to pick on. Riot, Speak of the Devil. There's another terrible looking one. Marathon, another terrible looking one. How could I have forgotten those absolute crapcos? Nokia, Gap, but nothing to do. I mean, this circle is interesting. I don't know if the whole crypto narrative is ready to rip. It doesn't really seem like it's got a lot of buzz around it. I feel like crypto really needs that to go on its big runs or like do anything impressive. So, not convinced. IONQ for Quantums kind of looks like a short to me, if I'm being honest. Failure at the 50 and the 200 underneath those lows. 44.65 could be a short. Wolf, no thanks. Sienna, reclaiming the 50-day. Why do we want it here in this left side range? I don't know. I don't really think we do. Ondis, fine for drones, but UMAC is the spot to be. Reddit, gap up on S&P inclusion. That's just going to get written in as a short. Inclusion, Catalyst. This is a short, though. Close the gap below. What else is happening here? Coinbase, no thanks. Nope. Teradyne, beauty, inside bar. Looks good for longs to continue. Good. Fiber optics kind of woke up today. AXTI brings that to mind. There's that cipher, no thanks. Credo, yeah. Credo, yes, yes, yes. Longs out of that hammer, perhaps. Robinhood, no. Strategy, no. Vertiv, no. Rocket Lab. Getting some convergence of moving averages, but not really my. That's not like a text. Do you put that chart in a model book? No, heck no, you don't. ARM, getting tighter. Don't hate ARM. Really tight day today. I'm like, no volume. My goodness, look at the RVOL down here. A 38 RVOL today. It's insane. Look at the range on this thing today. That is something else. I mean, talk about a tight risk, short the low, break the high long. Either way on that, you've got such a tight day. You could go either direction. I'd say, yeah, sure. Risk is tiny on it. So in terms of a pattern and structure, though, overall, yeah, I see the higher low. It's not really doing it for me. So pass personally. Not interested in this SMCI. This GEV has really started to perk up. It's on an improving list. Let's say GEV, add back to focus list. I took it off the focus list when it was getting kind of gnarly in here. This is looking like a short underneath these inverted hammer lows. The fact that it recovered so well, pretty impressive. There's, again, your optics really lighting up. AAOI strong. Should definitely be on the list, focus list, if it's not already. I can't remember. AOI must be on focus list out of this range on volume. Good. A-Lab. And for anybody who's maybe new to the videos, every single stock that I write down here is not necessarily ready to rock and roll, be it long or short, in the next session. This is just like we're building a list of names that are actually worth paying attention to, and then it's up to the intraday action or even pre-market action to tell us whether or not there's something to do. This A-Lab, I'd focus on the Credo before I focused on the A-Lab, but it's not bad. Corning, call me crazy, but look above and fail 169 into the 50 SMA. It's kind of still looking like a short. GLW short question mark? Whoa. Needs to LAAF on the 50 SMA. Good. Almost at the bottom of this list. Irene, you could go higher low over the breakout point, 4150, but not a focus. I think the NBIS, which we'll get to, of course, is better. Coherent, also looking like a short, similar to GLW. CoreWeave, terrible. Lamb, no. Oracle, meh, don't hate it. Look below and fail of prior day low, could be it, or break a prior day high if you're looking for longs. I don't mind it. Tough look on this app. AMAT, terrible gap fill reversal on earnings. STX, just an absolute ripper in memories. Still top memory name. It's really emerged as the best chart there. Light's not terrible. It's not terrible. What's the 1 year chart? Yeah, I mean, not bad. Has made these are really like tough moves back over here. Choppy, grindy, headachy, but doing the thing. It's where it needs to be. Longs, at least. Marvel, just like ARM, very tight day there. Very tight day. A little bit more RVOL over here. About twice as much. It sounds crazy to say, but it is. Only 64, though. Next up. I mean, look at how much better STX looks than this WDC. So, I mean, you want to talk about hard drives. And, hard drives, how boring. Or it's all about NAND and flash, right? I mean, come on. WDC, STX, right? There's not even an argument about these two. Bloom Energy, short. BE, short watch. NBIS, long still. NBIS, keep on top, focus for entry tactics over next few sessions. Intel needs to look below and fail 100. I just realized we didn't go through the core list of companies, did we? I did not update the levels there. I'll have to go back and do that in a second. Intel. Yeah, we just covered that. This is AMD, another core list name. Wow, really impressive. I was actually short against the daily 50 today for some 0 DTE fun. Stopped on the first attempt, made out like a bandit on the second attempt, but strong close. Strong close. Tried it in here on a 2-minute chart, believe it or not. Tried it in here, inverted hammer, break the lows, looking for the VWAP, stopped over the highs, then tried it in here under that shelf, paid into VWAP and some. So nice AMD, but chart is improving. Put in the improving category. SanDisk, improving category. I don't know if it's long immediately, but that's a good look. And then MU, improving category, over 900 and especially over 1,000. You know, bye, 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 as Jim Cramer once said. So let's actually remove that Intel because it's a core list of companies' name anyways. I'll save the core list for the true end. Let's go over to the universe sub 100. It's between $100 million and $200 million of average 5-day dollar volume. Let's let this thing load, and then we'll take it from there. Looks like Thinkorswim wants to play fun and games, of course. So let's load a different one. And we have to go through this one anyways. This is high volume options. A lot of overlap here. Could probably hit a filter on it of exclude. Let's try this real quick. Let's go to edit high volume options and let's exclude not core list, but let's exclude personal and this over 200 mil because we already looked through all those names. Let's just kind of filter that a little bit more. Okay, that should be, I mean, it still looks like quite a few, but, and it looks like some names that we've seen. Okay, it just thought, and it just updated. That's good. That's a bit of a shorter list. Okay, high volume options. These are all core list names. Broadcom is, so we'll cover that on the core list. Okay, gold miners. Let's start here. Nope. No thanks. Nope. Not interested in these Oilers. There might be a killer trade there, but I'm just not interested in the Oilers. I feel like I don't want to lose money on something I don't fully understand. I'm not a global oil expert. It's not a game I want to play. All it takes is one Hormuz news, and you're either waking up rolling in the dough, or flip side, you know, especially if it's an options trade, you're getting a sharp kick in the teeth. That PayPal's breaking out, but meh. Financials, HPQ, no. Really just focused on clean charts. Carry regional banks through this breakout level? I don't think so. Not for me. Let's go down. We're basically at the bottom already. Brazil. Nope. These are not interesting charts. Roku. I mean, that's interesting. Wow. Decided to get in gear. Sneaky little Roku here behind the scenes. Terrible ATR, but really waking up. Nope. Wow, pretty lackluster through this scan. Definitely because we excluded all the good stuff in the 200 mil plus category. Bucket, I should say. None of this stuff is good. This is all just absolute garbage. Wow. Talk about slim. Uber's not bad. Uber, how you doing? In the range, though, still. Tightening up on the right-hand side, but in the range. Flagging out. Let's just write that in as a little interesting note. Uber, tightening up the right-hand side. Currently a flag, but still below the 200-day. Okay, good. Walmart, let's go back to this 3. There we go. SoFi, nice flag. Googler, we know about. There's the SMH, Google Meta. Okay, we already know all the remainder of these names. Good, let's hit the $100 million scan. Give that a second to load. And then we will jump into the core list of companies. There it is. Nice, Thinkorswim. Running smooth as silk this afternoon. Dave, that looks like a short. Dave. Looks like a short if we can look above and fail the daily 50 on another day up. Has to be early this week. Okay, like this is something I would look for on Monday. If on Monday we rally into the 50, start to reject in there, and then close one of these, you'd be glad to be short off the 50-day, not breaking this low, and then trying to get to the lows. So, Dave, we're a little bit of a short out of this name. I mean, it's really, I don't want to call it overextended, but if you take the break of the base, let's just start from this low. I mean, that's an 85% move. Not terrible. This is now a, 33% haircut, and the bounce off the lows to the 50-day would be approximately a 20% move. It's not a huge, it's definitely not a top watch as a short in there, especially if the broad market remains bullish, but it'd be an interesting spot to try. Get a little bit of a short on, see if that can hedge out the swing portfolio a little bit. Not that I'm overly long as of right now. I'm just kind of comfortably long, but there's that. Let's move forward into the remainder of this list. Go, Daddy. Karaman Holdings, not bad, but yeah, coming out of this little base, I don't hate it. Bear with me for just a second. Don't call me crazy. Sometimes when I'm looking at these low bases, I'll throw on a MACD and just kind of see if there's anything that it's telling me that's sneaky down here. I mean, you had classic MACD divergence. Higher lows there, lower lows here. Karaman coming up and out of this, right? So it's actually not terrible. Let's remove that for now. It is not terrible in a little flag there. Karaman. KRMN. Not terrible in a bull flag on daily. Probably want to be using this as a last case long. I'd prefer to buy something with a bit more strength over the 200 SMA, better history of trend, right? Something a little bit more firm by now. Anyway, moving forward, let's keep ripping through this list. This AUR keeps coming up. AUR, put it on the list. Watch for a base break. Nice higher lows over the MA stack. Good. No. Split coming up on that. Why are we I mean, yeah, I guess. No, still in the range. DocuSign, no thanks. Oof. Hinge Health, yeah, sure. HNGE, looking good in the higher low flag over the 8 EMA, good. Comp, looks good. Higher time frames and model book chart. I mean, this thing is like picture perfect. Comp, right there it is on the daily. Picture perfect. So you could continue to watch that. It's already on the list for what it's worth. So I'm not going to write it in. There's not really a new setup there yet, but that is that. This Hud Bay. I always say it Hub Day, but it's Hud Bay. I get that backwards. Was looking interesting with those rare earths. This is not a great close today, so pass. 5.9 FIVN. What does this do exactly? I'm familiar with F5, but FIVN. What are we over here? 5.9 is a provider of cloud-based contract center software and customer experience solutions headquartered in California. They deliver the 5.9 Intelligent CX platform, a unified cloud-native suite designed to run inbound, outbound, and balanced contact centers across voice and digital channels. Okay. So it sounds like it's in comms, or cloud comms, if that's a blended sector group. Okay. Sharp move up. You can't deny that it's come from lows at 18 to 34. It's made a big move up. What does previous trend history look like on something like this? Oof. Talk about kind of ugly. I'm trying to look for strings of nice movement. This is really nice in here. That's from what, 55 to 78? Not a huge move. 50%. You know, you want to see like 100+% gains. I don't hate it. It would be a performance booster. Let's say FIVN could be a perf booster if it if there's nothing else to do. Okay. Let's say terrible chart history. just so everybody's clear on that. Okay, moving forward. Oh, we don't need all this time anymore. Wow, what is this? Oh, it's a therapeutics, so nope, that's a biotech. We pass on drugs, don't do drugs. 4, nope. Stick with Dave. Cars, life sciences, it's biotech, no thanks. I wish there was a better filter to exclude biotechs on Thinkorswim, but I have not figured that one out yet. Fly? No. I don't think so. Figure? No. iNod? Nope. Nope. A lot of this stuff kind of rolling back over. Form doesn't look bad. Form factor here. Gapping up. Still a loose chart. Wide and loose chart. Nice movement in the past, though, right? That's the type of movement you want to emulate. This stuff in here. So I don't hate it. Needs more time building out this base, though. It's too hard to say, like, yeah, right now is the time to get it on form. I don't think so. I think it could show you a better right-hand side. Solar's tough. Galaxy, no thanks. This AEIS still looks good. It's already on the list. That one I remember manually putting in there. Wow. FPS. Talk about just a clean breakout level. Even if that's a day trade. I mean, this thing moves 7.58% on the ATR. Let's say FPS. Clear as day. Launch pad over 4019. Or 4020. Whatever you want to call it. Round numbers only. I mean, that is classic. Let's call it pressure cooker top to revive some of the old Trade Brigade lingo. Good. FPS. Fuel cell, no way. And MCore, no thanks. All right, that's those are the scans to conduct, and those are the scans that we did conduct. Now it's time to update the core list of companies and just quickly buzz through these hourly levels and make sure the homework is complete. NVIDIA, what a choppy move against this 225.25. It's got to go. It's got to go. Clearly not respecting price there. The low end of the range, 224.25. And the new highs in today's opening print up there at 85. And we go from there. That's it. That's the update. That's it. That's the tweet. Good. Let's go to Apple. Garbage. No level updates, though. I wouldn't touch that thing with a 10-foot pole right now. This Microsoft, I mean, I'll give it credit. It's just cooling off. I think if we lose the 8 here and pull back a little bit more deeply, entertaining the gap is interesting, but I don't think we need level updates. This is fine as is. Fine as is. Probably could just remove this and just say you lose this shelf, lose the 8, good night, right? Head on down to 475. Test the gap. Let's go to Amazon. Amazon looks, believe it or not, good. I don't think you can fall out of bed 4 days down in a row, look below and fail, and then try longs. That to me is the look on this Nancy. No level updates there. This Googler, tough look, kind of in the middle of nowhere right now. This is the key higher low hold, and these levels need to show us something a little bit more firm in terms of pivots. So I think this stays as is, to be honest, for now. Don't like how congested some of this is, but that is just the way it is. Honestly, in situations like this, it might be worth just doing a little bit of this action. Let's do, that stays yellow. This is just going to get pushed way back to like that, right? Because I care mostly about that gap that exists underneath us if we're going to go retest those lows. I just want to know that there is technically some structure at that 341s. So, okay, good. Next, Broadcom. What a disappointing move today. News about their VMware, of course, and some exploit, but 50-day SMA could not offer gap fill reversal support. We'll see what it does into early stage next week, but the ideal long on this thing would have just been like retest, look below, and fail to 20. I actually tried that long today, got stopped out on it, of course, but no dice on the Broadcom setup there. after breaking out of this range. So we'll see where we go from here. No level up. Well, actually, yes. Who am I kidding? Level updates. Of course there are. We get rid of this because we just smashed right through it. The top of the range is still there, but we probably go like this, and we just reduce importance in the range. Now this goes away. Yep, I would kind of leave that as is. This even goes away here, and it's this low. I know that might look off-putting to some, but that is the true level from the last hourly switch up. Crisscross, as we say. That needs to go gray. Going gray. And dotted, good. And we move forward to the metaverse. Yep. Metaverse, still just toying around in this range here. I'm waiting patiently for that, so I don't really think there's much level updating to do here. Have not been totally responsive to this 592 spot, so let's go to the 5. Yeah, I would just remove that. Yep, keeping it simple in that range right there. Next up, MU. This is such a pain in the butt to look at this chart, but all the levels are actually where they need to be. We could reduce a little bit of visual noise in the higher time frames. Like, we don't need all this nonsense anymore to the downside. We don't need this gap down here anymore, or yet, I should say. Oops. Let me label this G so we remember. Oops, come on. Shift G. There we go. Gap. Good. Let's label this G for gap over here as well. Don't need this. Don't need this. Even though the levels are still there, this chart just becomes a little bit more digestible. Like the DRAM chart, I hate how congested and Swiss cheese this entire nonsense was in here, but again, on the hourly chart, the levels are actually leveling. It's a testament, really, to the precision of knowing where to place the lines, right? You know, you can go back and watch previous videos. These lines have been here since here and here, right? This is not a new line on the chart, so it's pretty amazing the way that the market balanced right in between those two key levels on today's session. What I would be a fan of doing is actually this. Let's firm this up to a white. And honestly, part of the reason it looks so noisy is some of these gap levels are just a little overbearing in terms of brightness. If we drop that to a 50% opacity, I think you're like, I can actually breathe a little bit better on this chart now. You know, not a huge help, but let's just do that. Maybe see this MU with a little bit more clarity. Yeah, that's a little bit better. You still understand it's yellow for a gap, but you can actually see it now. I don't hate this. I don't hate this at all. We may firm up, let's just maybe firm up the gap that exists above us. Just to put it on there. Just to have a little bit of gap action going. And, you know, we could make this 50% opacity as well. Just so we're not blinding ourselves. And let me also label this G since it is. Good. And we'll do the same with this one. Just make this a 50% opacity. Good. And I don't think we need that. That's it on the top side. All right, next up, Tesla. Teslita. Gnarly reversal today. So again, let's clean up a little bit of this price history in terms of levels. That I think stays. Hourly chart. Nope, you know, we do this, and 302.25 stays, but like I said on some other chart examples, we don't need all of that. I know I said 25, but we'll go with 302. We don't need all of that prior history, so we could just cut the left-hand side a little bit cleaner. This goes away now. That stays, but turns into white. And these go away here. That kind of tested. So, you know, we tried to move higher and failed it. So we'll just go like that on the remainder of the gap. And we'll be good on that front. And I like the way that the rest of this chart appears. as of now. Let's go back to this daily. Yeah, the thing I'm not worried about, but contemplating is this 325.75. It's relevant. I don't think we need it extending all the way to the left, though. 325.75 is just right here. It's just the bottoming. Actually, it's not. That's not even it. It's actually here. 324.50. How about that? Okay. 324.25? Yeah, we're doing it. That's the true crisscross on the hourly. That's the magic spot. Okay. Works for me. Remember, like the point of the level is to say, do you think it's bullish or bearish above this? I don't care what happens to left. If it's confluence, that's great. But this level is like, if we take out that low, are we bullish or bearish? Well, losing that pivot on the daily is no good. That is no good. So that stands. The rest is just sort of awareness to the downside. JP Morgan, I mean, my God. Talk about just a very linear drift in the upward direction. I'll leave that one and probably firm it up. I'll promote you to a firm level. There we go. And probably honestly demote this here. Not like we trade JP Morgan aggressively, but we'll demote that and instead promote this because that's the pullback low in there. Let's just double check that it's the right hourly level. Survey says yes. Yes, yes, yes. Okay, good. JPM done, and moving forward to the final two. I mean, AMD, talk about a just annoying chart, but it is what it is. Let's throw this into a gap label. There we go. And a gap label over here. Good. And we continue to reduce visual noise. Come on now. I wish they just had the black as a core color. It'd make life so much easier. Actually, I'm going to leave that. I'm going to leave that one because it's close to this pivot low over here. From this view, we go to the hourly. And we go hunting a little bit further. Okay, a little gap down below that we can definitely annotate. Just a reminder, right? I care more about reading the chart from right to left. We'll pop this in. Because we have so many levels on this chart, I will take the time to make this a 50% gap. And the same thing here, a little bit of an unfilled gap. What's the lowest low of this bar? 481 on the nose. Okay, 481. 50%, just to keep the visual noise lower. That needs to be updated to about 496.65. Let's just say 50. It's a wide enough stock. Good. This upside, yeah, yes, yes, yes. 507 stays. 507 stays, and then honestly, there's really not a lot until this might be a little bit more appropriate at 527.50, up by about $1. Good. And then our final name on the list, that's it in this range above. I mean, you could get level happy and put another level here and another level there, but at that point, you're just back inside that upper balance. It looks like we have some extension off the left as well. Let's reduce some visual noise. Really only needs to go back to here. Wow, nailed the Thinkorswim. Gave me the exact round number. Beautiful. Just need to update the color. Great. And that stays put. All right. Go back to the daily here. Make sure we're looking all right. Yeah, I mean, very, very straightforward, right? Balance range, new lower high there. It's our next target to the upside. This is good. This is good. I like the way that chart continues to develop in terms of levels, at least. What else is going on here with this Intel? Needs to look below and fail this gap. So $100 is still a key spot. But what do we have on the hourly here? You know, speaking of visual noise, the more I keep looking at this adaptive EMA, the more I kind of want to just push it back and say, like, stop yelling at me in the face. How can we just make you a little less aggressive? Maybe it gets the same treatment. Maybe. I don't know. We'll see. I don't know if I like it. But that's a little bit better. Intel levels. 100 is just such an important spot. It needs to do something in this little gap down here. What is the high of this bar? 98.35. Because this is an important gap, I will keep that. Unless it just totally blows out the daily, which it could. Oh my god. This thing is just a laser light show over here. But it's the correct orientation of the chart. I don't care how much of a laser light show it is if it's telling me what I need it to tell me. It is telling me what I need it to tell me, right? That if we look into this gap and we can support there, that is an important gap to close. So that works for me. And that's it. That's the final name in the core list of companies. We've hit all the scanners. We've updated all the levels on the sectors and such. And expect the full-blown, organized analysis, not just the process video over on the main channel Saturday morning. With that, I hope you guys have a great weekend, a great upcoming trading week. If you like these types of things and it's still worth it to just pop them online whenever I go through and do my end of day routine, let me know in the comments section. Like I said, I don't know, halfway through the video or whatever, we literally do this analysis every single day at the end of the day with the group going through the scanner, updating levels, figuring out what charts are in play, what charts are not in play. If you're interested in that, all that stuff is linked down below. But I'm sure if you've made it to this point, you already know where to find us and where we're at. So have a great weekend. Have a great and green trading week ahead. And as always, I will see you in the next one.